Congress just passed the biggest housing bill in more than 30 years. And how will that affect Central Washington and North Central Washington housing? I'm Nick McLean, owner of the Nick McLean Real Estate Group, and this is a really big bill because it's going to affect inventory. And we've seen a massive shortage of homes over the last 6 years. And that shortage of homes has made homes unaffordable, especially when you combine the rising prices of homes with the rising interest rates. Homes have never been more unaffordable, and they're really unobtainable to a lot of people. And so this new bill is going to make a dramatic impact on supply. It's going to lower the red tape, lower the regulations, modernize the HUD standards so that builders and developers can build more homes. You're going to see more manufactured homes, more modular homes, and more modern builds that are smaller square footages. Because part of the reason home values are so high is people started building bigger and bigger homes. And that was because they could, and that's what the client was demanding. But more and more people want a starter home again, 1,000 square feet, 1,200 square feet, 1,400 square feet. So that supply is going to come on. That's going to bring more affordable homes to the marketplace. But don't be in a hurry, because that's not going to happen for 3 to 10 years. And this bill needs to stay in place. So if you're a buyer right now, you have to understand, if you're financially stable or financially approved, you should buy now. Because waiting 3 years to 10 years could actually cost you tens of thousands, if not hundreds of thousands of dollars more. Why? Because if you bought now or buy now, chances are that value of that home is going to go up. See, supply is low. It's going to remain low. As long as supply is low, prices go up. And you might be thinking, well, interest rates are high, so I'm going to be paying a lot of money and I want to wait for interest rates to come down. Well, guess what? Interest rates have the same chances of going even higher than going lower. I mean, let's be honest. Rates have been in the 6% for the last couple of years. I don't see that changing. And yeah, we might see interest rates drop to 5%, even 4%, but then prices with low inventory over the next 3 years are just going to skyrocket. So what you really need to happen is you need to wait 3 years, supply to increase, and interest rates to go down. But then the demand's going to go up. So you're really stuck in a hard place. And the best thing to do is not time the market, but you got to be time in the market. And this goes for everyone watching this video. If you already own a home, the question is, how long do you want to be in that home? Because thinking that rates are going to come down or that there's going to be this magical housing crash and you're going to take advantage of it, the dip, is just foolish. It's not going to happen. Even if the housing market dipped or crashed in the future, you have to realize the home you're living in right now is going to crash. You're not going to sell that home at the peak, then put your family or your wife or your husband in an apartment for 3 years and live in an apartment and then go buy. That's foolish. It doesn't happen. And then let's say you did sell your home and you move into an apartment. You're paying rent. And rent is not cheap. Rent is basically a mortgage payment. So the best thing to do now is to improve your quality of life and make a smart move to the location or home you want to go to now. Get an interest rate at 6.5%. Get an interest rate at 7%. And hey, if interest rates go down, then you refinance. If interest rates go up, guess what? You made the right call. So all in all, this bill is a magical thing. I think it's a great thing for what we need. We need more supply. I think everyone can agree we want more supply. Now, do we want more people and more density and more traffic? No, we don't want that. But with development will become the regulations, the community regulations and zoning are going to require improvements to the road, improvements to the stormwater, improvements to underground power, water treatment, sewage, infrastructure. So I can tell you that in Douglas and Chelan County, there's not going to be more development unless we have the infrastructure to do it. So first and foremost, you're going to have a better community, better infrastructure, and I think that's going to be better for most people in the community. I think we can agree to that. Fire departments, police departments, all that infrastructure has to be supported. And that can be supported because you're going to have more housing, you're going to have more tax revenue, you're going to have more sales tax. So with that increase in density, if we do it the right way, that population, we could solve for some bigger problems like traffic, like safety, like infrastructure with sewer and water and power. So I think this is a good thing and I think you should embrace it. In fact, last couple of years, I was actually looking to manufacture home and modular homes because I think those factory built homes, the way they do it today, are really sound, really efficient, and they can be delivered quickly and effectively at price points that you like. So don't be foolish and not look as if I'm a first-time home buyer, I look at manufactured homes. As an investor, I look at manufactured homes. So there's a lot of things going on, and I want you guys to pay attention to that, but also know, again, it's not going to come for 3 years. I mean, there's not going to be meaningful impact for at least 3 years. So, and I think you need to come to terms with there's not going to be meaningful changes to interest rates for the next 12 months. It's just not going to happen. You might see a quarter or a half a point dip, but that dip in interest rates is just going to show up on the purchase price. It's just going to show up on the purchase price. So look around your environment, look around at your house, and ask yourself, is this where you want to be in the next 3 years? This is where I would be the next 10 years, or explore other opportunities in the marketplace and see what's out there, right? If you're moving up or moving down, what's out there, and does it fit your lifestyle or where you want to be now?